Okay, so this is the second part for chapter 7 of the subject Church Financial Management. Continuing on, adequate staffing and financial expertise an important priority. So, in a way, we're focusing on the financial reports, preparation of financial reports, and ensuring that all transactions of the church, financial in nature, are properly recorded so that the financial reports provided to the management are adequate. They have enough information to make accurate decisions. Okay, here's the thing: if the records are full of errors, or if the records are not complete, there are missing transactions. So the final information that might be provided to the management may not be accurate. And if the information is not accurate, then any decision that would be made based on those inaccurate information might, you know, they are not going to be proper decisions because they were based off inaccurate information. So again, from that you see the importance of having proper recording of transactions, ensuring the completeness of the financial records, and ensuring the accuracy of the financial information provided to the management or the decision makers of the church or the organization, okay, any organization for that matter, right? So reporting financial integrity and compliance. Okay. Internal control. Part of the internal control is having adequate staff who are endowed with financial knowledge. Okay. Some churches would, they would think that it's not necessary to have three people doing all this work. They might think that one person is enough to do it. Okay. And then they might also think that paying a CPA is too costly, maybe. Okay, they might not be able to hire a CPA if they're only offering a low amount as a salary. So they might, consider hiring someone to do the books who are not qualified. Okay, but again, it's actually fine as long as the person has the knowledge for financial recording. Okay, later on we will do financial recording. Okay, recording of the books, but that would be much later. Okay. Anyway, going back. So with regards to staffing, there's this so-called segregation of duties. Segregation of duties require that the person holding the cash or receiving the cash is different from the person recording the cash. Okay, and then aside from that, you have another person doing the checks or doing the review of everything. Okay, the reason why you don't want the person holding the cash or handling the cash to be the one recording is, for example, the cashier, right? The cashier collected 10,000, let's say 12,000 pesos during a given day, right? If she's the same person who would record the collection, there's the possibility that she may record it as 10,000 instead of 12,000, and then she would pocket the difference or the discrepancy of 2,000 pesos, right? So only 10,000 would go to the church, 2,000 would go to her. Okay, and no one would, know better because she's the one handling the cash. She's also the one recording how much cash there is. Okay, so in that case, there's no balance and check. Okay, so she can do whatever she wants. Okay, she can commit fraud as much as she wants. All right. In the case of segregation of duties, you have this person making the collections, and then for the collections, okay, the cash is there. It's 12,000. Okay, then you have this person recording the same transaction, and then of course, he has to check the money. Okay, how much money is there? 12,000. Okay, record 12,000. Okay, and then of course you have the auditor later on, which would check how much money went to the bank, how much money was in the record, how much money went into the bank. Is it the same amount of money? If there's a difference, where did the difference go? Okay, so you have that. Okay, in a way, the recorder would also, check how much money has been received for the day. Okay, so there is that, right? That's an example of an internal control. And again, the importance of having adequate staff. You need at least two. One who would handle the cash or the asset, and then the other who would record or check the existence of the cash. Okay, if it's 12,000, it must be 12,000, right? And then again, the personnel who will be placed in accounting and finance must have um, adequate understanding of how to record the transactions and how to keep the records, accurate, complete as much as possible, right? And then at the end of the year naman, you have the audit. In a way, it's a requirement by the law for the financial statements to be audited. Okay, if you are a registered corporation with the SEC, or Securities and Exchange Commission. Okay, screening finance and accounting roles, again, they must have adequate knowledge of accounting and finance. Okay, doesn't for me, because this is a non-profit organization. As long as the person knows about it, and then there's someone who would check. In a way, the auditor needs to be a certified accountant. So there's that. Criminal and credit background checks should be periodically updated for existing employees. So you can do this, okay? Criminal, in a way, if a person has a history of criminal activities, committing fraud, committing theft, so you may not want that person to handle your cash, right? And then credit background, if a person has a lot of debt, he has a lot of borrowing, and sorry, he has this need to pay off his loans, and he might not know where to get the money. He might be tempted to get the money from the organization. So, you may also not want that person to handle the finances of the organization or of the church. Okay. Insurance coverage for employee dishonesty. I think this would apply if the church is, a big church handling large sums of money during collections. Um, what I do know is that banks, they do have insurance. They call it teller bond for each of their tellers or cashiers in the banks. Just in case one of the tellers, run away with the money that they collected during that day. There's an insurance company that would, pay off the amount that has been stolen. Okay, insurance coverage for employee dishonesty. But for a church, I don't think a bond would be necessary unless it's a big church. Okay. For one, what do you call it? Trust and confidence in a way. There for a church to assign someone to be the cashier, to receive money, to uh, handle the collection. So it's a matter of trust and confidence that the church management truly trusts this person to handle the finances properly. So, um, again, other than that, they might also, ensure, again, internal controls. The money is not taken out of the church, it remains with the church, it's in the cash vault. If there's no bank, what do you call it? If it's not possible to deposit them in the bank yet, they remain in the cash vault, and then the cash vault is, locked. And then the cashier or the person is not allowed to take the money out of the church and into their house. Okay, the money needs to remain at the church, and then the next day, during banking hours, so they take the money from the church to the bank, okay, directly. So there's no you're trying to eliminate the risk or the possibilities of it being used in uh, being stolen or being used improperly, or embezzlement essentially is the word. Okay, and then protecting cash transactions, there are two. Internal controls can be classified into two: prevention and detection. Okay, not all misappropriation, embezzlement, or fraud can be prevented. Okay, but yeah, sometimes it already happened, and then you would detect it or you would discover it later on. There are certain uh, measures in place to ensure that such an event, such a theft, misappropriation, embezzlement can be detected. Okay, because again, in accounting, we require transactions to be there before recording a transaction. If there is a record but there are no supporting documents, so that's a red flag. We have to find out where did the money go. Okay, there's an outflow, there's a disbursement of fund, but we don't see any what do you call it? We don't see any record of where it went. Okay, so you have to ask. Okay, and then the reason why it's also important for the money to be in the bank is that for every disbursement, for every withdrawal from the bank, there is a record in the bank statement. Okay, and then if we see in the bank statement that there's this debit or an outflow of cash, but we're not seeing anything corresponding to it on the records, on the books of the church, then again, that's a red flag. Why is there a disbursement on the bank statement, but there is no record on the church, in the church record? So again, that's a red flag. So there are ways for us to, detect such transactions. But again, it doesn't necessarily mean that a fraud occurred, or it might be an error, it might be a missed transaction. Okay, it was there, it's a known transaction, but they just forgot to record it. Okay, that happens as well. Okay, so essentially you have to check first during audit. If there are discrepancies like that, we need to ask, okay, what is this money about? What's this amount about? Okay, because in the bank statement you have the amount, you have the date, so it's quite easy to check what happened during that date for that amount. Okay, so we have that. And then prevention, again, internal controls that would prevent this misappropriation, embezzlement, fraud. Again, you have balance and check, two people handling the cash and then recording the cash or checking the cash, and then have to make sure properly documented. You have the papers to support the expenses, and then for the cash, you deposit it immediately to the bank, and then any disbursements, they are either in the form of a check or there is a voucher for the disbursement. Okay, so in a way, those are the uh, minimum internal controls. Okay, for the prevention and detection of these things. Okay, and then of course you don't take out the money. You don't take the money elsewhere. It's just in the church, and then you put it into the bank. Okay, you don't take it anywhere else. Okay. What else? Other types of internal controls. Mm-hmm. All right. A person with access to blank checks may issue one to his name, forge the signature. So for the most part, the checks are also kept in the office, normally in a locked space, and then you don't you don't get you don't prepare a blank check. Okay, you always prepare a check first. You fill out the details, the date, the payee, the amount, before you get the signatories to sign the check. Okay, you don't want a blank check signed already. Okay, because that might be used for fraud. And then as much as possible, the signatory's signature must be difficult to copy, difficult to be forged. Okay, because if it's kind of easy to copy, there might be tries or attempts to forge the signature. And then arrangement with bank to confirm a check or endorse check issuances. So for example, for check issuances with amounts over, a certain amount, let's say over 50,000, you would require the bank to call the office first to confirm, hello, did you issue a check amounting to this much to this person? Okay, and then the management or the church would, yeah, we did issue that check. Okay, so there is that, balance and check. In in my employer, for checks over over a certain amount, normally for salaries and wages, yeah, the bank do call my employer to check if that amount has been issued for payroll. Okay, and then what else? endorse check issuances with the government, municipality, city. Of course, here in the Philippines, we have Land Bank and DBP, Development Bank of the Philippines, as the depository of the government agencies. Normally, when they issue checks to their payees, they have this list. They also make this list of, check numbers, payees, and then the amounts, and of course the date. And then they endorse it to the bank, and then the bank would check whenever someone deposits or in cash tries to encash a check. They would refer to that list if the government agency did in fact issue the check. Okay, so they do that. In a way, it's a balance and check mechanism to ensure that the checks are in fact prepared by the company or organization to prevent use of blank checks or forgery on a blank check. Okay. And then again, trustworthy people versus what's this? Internal control represent distrust. Okay. I think earlier we did mention, trust and confidence when assigning someone to handle the cash. You try to get the trustworthy people with integrity, who are honest, who don't have a background or history for being dishonest. Okay. But then the internal control, in a way, it does represent distrust because you have to trust and then verify. That's why you have the balance and check. Okay, and then the need for two people to verify transactions. Although you have two people already, there's still the possibility of collusion. These two people might, talk to each other, convince the other to, hey, let's get some money from the collections. Okay, but then again, balance and check. They might both have the need at the same time, or there's a possibility na the other person would be like, no, it's a bad thing to do. Let's not do that. If you need money, I'm going to lend you some money, or I'll ask someone if they have excess cash they can lend you. Okay, so in that sense, uh, the possible theft would be prevented, and then you address the concern of the other person in a good way. Okay, it would remove the temptation to say to commit theft or fraud if you have that other person to call you out when someone tries to. Okay, so again, key principles would be segregation of duties, dual control, balance and check, and then you have the appropriate oversight and monitoring. You have that audit to make sure that to detect. Okay, if you can prevent it with the internal controls, you can detect it with the audit. Okay, so there is that, and then the other two, with regards to internal control, I'm going to finish it in this video. Relevant and timely financial reporting, again, we mentioned earlier. The financial records must be complete and accurate so that the decisions that would be made by the church management are appropriate as well. Okay, so recording must be complete and accurate, and then they are provided in a timely manner. Okay, and then the last one is compliance, reporting to authorities. They need to be submitted on time to the BIR, to the SEC. And then audit or internal control are also checked whether they are implemented and whether they are doing what they're supposed to do. And then you have the tax filing and payment for the BIR. If the church is not tax exempted, so they have to pay the income tax. But if they are tax exempted, they still have to file an income tax return. Okay, so that would be it for chapter 7. What's this again? Maintaining sound internal control. So I already summarized in my notes the inclusions that are here, but you can still read if you have extra time. Okay, so there is that. There are certain subtopics here, but I didn't include because they're not exactly applicable here in the Philippines. Okay, might be applicable in other countries, but not here. Right. So that would be it for chapter 7, maintaining sound internal control. That's it.